Let's have a look at VIENNA Advantage capabilities with respect to global financial management. Global financial management basically is related to companies who are operating globally, maybe with subsidiaries in different countries and have a consolidation or an add-up requirement. On the other hand, also companies who are operating with different nations with respect to different currencies and might need to also have some financial reporting in different currencies. VIENNA has a lot of tools and is fully able to handle all the challenges related to global financial management. This includes as well shareholder structures from different countries, having to report on different currencies for consolidation as well as add up. And let's have a look at that here in this demonstration. I have a company which is having is operating in 3 different countries, which includes an office in Germany, a UK office, and the head office, which is in the United States. In a single system, we are able to handle all these 3 different locations with respect to different accounting schema as well as different currencies altogether. And for that, we can basically create our organization structure with respect to legal entities and non-legal entities. So the brown ones that you see here are the legal entities, and the blue ones are non-legal entities, which could be divisions or cost centers, profit centers under a certain legal entity. Now what you see on the right hand side is basically structure for consolidation, where we are able to create the nodes that you see here in the gray color in order to add up or even generate real consolidation consequences to run our reporting. Compared to the left side, which is the standard organization structure, on the right side we have an alternate organization structure, which consists of entities as well as nodes in order to add up and sum up reporting. In VIENNA Advantage, we are able to run multiple reporting hierarchies. So we could have one. In this case, there is one which is generated, by the way, automatically, considering that consolidation should be possible on all nodes or all levels. But you can also create a new one yourself and then join the nodes. For example, if you would like all stores across 3 different nations to be in a single node, you can do that using the alternate organization structure or the reporting hierarchy. Now, as one of the next things which is important is for different countries is a chart of accounts for global financial management. So different countries have a requirement to have a different chart of accounts, and here we have created 3 different charts of accounts, one in the German for the German HGB, and another one which is according to the United States and as per the United Kingdom. So we have basically 3 different charts of accounts, whereas each of these charts of accounts, of course, will be linked to the respective organizations of those countries. But for the consolidation purposes, we are going to link also one United States chart of accounts to all the organizations across different countries. So which means we are able to not only link a single chart of account to a single organization, but we are actually able to link multiple chart of accounts to a single organization, whereas postings for that organizations will be generated in different currencies and according to the accounting standards of that particular chart of accounts. We'll see that also in a while how that works. So important to see here is that we are able to generate multiple charts of accounts in a single system and assign those to different companies and entities. And here on the right side you see also the reporting groups. These reporting groups are relevant for our financial reporting. All our reporting structure is based on the reporting groups. Now these reporting groups basically are used to structure our financial reporting at the end, whereas accounts or ledgers can be linked to the financial reporting groups in order to structure our financial reporting. VIENNA Advantage has a nice tool and a very powerful tool for structuring the financial reporting. So in that case, you can link one chart of accounts with one reporting group structure or even multiple reporting group structures in order to have different reporting structures for your financial reporting. Now, one of the next things which is relevant for consolidation and financial reporting is the accounting schema. The accounting schema defines that the rules for accounting, basically, I wouldn't say for a single organization, but according to one way of accounting. Now, in this case, we have, for instance, 3 different accounting schemas. One accounting schema presents a certain way of accounting, logics, postings, how will the postings happen, etc. We have, for example, in this case, one in the United States dollars, another one in German in euros, and another one for the UK based on the pound. And let's have a look at one of those. So we have the name of the accounting schema, the gap. We have also certain settings related to costing methods, whether we are using commitment and reservation accounting or not for budgets, etc. We also have the costing level defined. Now, there are some general settings and global settings which can be done over here, but also at the product category level there are certain settings which can be granularly further defined and modified. These are inherited initially, but then they can be changed. Yeah, there are some other things related to the accounting schemas and rule of accounting which you can set related to tax corrections, account localization, period management, etc., etc. Now, what is interesting is that in this case, this accounting schema which I have selected is basically can be assigned to one single or multiple organizations. If we do so, now in this case we have assigned it to star, which means it is assigned to all the organizations. That means basically that the US GAAP accounting schema will be posted for all the organizations inside this system, which means it is relevant for all the 3 organizations. So if I have a transaction in one of the organization, that organization's postings will happen based on the US GAAP for certainly, but also at the same time we can have for one or multiple organizations. Now in this case, as you can see, that the German office is going to use, and the German non-legal entity, both will be going just using the or the German accounting schema will be used just in Germany, whereas the US GAAP accounting schema will be used across different organizations. Now, what does that mean? That means basically that the German accounting will work in 2 different ways. One way will be the local accounting standards and the local postings based on the local chart of account. But at the same time, the German organization is also considered in the US accounting schema, which means that the German transactions or the transactions inside the German location will also happen according to the accounting schema set for based on the US GAAP. And this could be, of course, this could contain rules related to consolidation. So in that case, whereas in many other systems, the rules are that consolidation is done maybe at the end of the period, not transaction by transaction. In VIENNA Advantage, you can even do the consolidation right on the run time, let's say on the fly. When you do the transaction, a different posting rule for that transaction is followed in order to do the consolidation postings. And the linkage of the posting rules on each accounting schema is done based on the localization. So we have a localization window which we can zoom to view and to define basically the posting logic for each of these accounting schemas. Now in our system, in VIENNA Advantage, you do not need to code to define any kind of posting rules, etc. You can define these posting rules based on an accounting schema and on all the document types which exist inside the system directly. And here, for example, if you look at an accounts payable invoice, we are able to view the different postings which are possible or which are being executed at the time based on certain conditions, etc. By the system. So having multiple organizations, having multiple accounting schemas, you're able to run a global accounting based on all the rules which can be defined also even for such a complex situation like group consolidation. In addition to that, we also have, of course, the currency management, where we are able to define currencies and basically different currencies. And also interesting is that the standard and costing precision can be defined, which means how many decimal places should be maintained inside the system. And we are able to manage different rates and rate types, so buying rates, selling rates, custom rates, let's say company rates, consolidation rates. So we're able to define different rate types inside the system, and the final rate will be recorded in combination with the currency and the conversion type, so that in the end the relevant rate can be pulled into different transactions. And also we are able to get the currency rates directly from an external system, from an external source, whereas we can define, for example, xe.com or Google as our currency conversion source, and use that source basically for us to do some kind of direct currency rate import. So we can set up these things over here, and then also then do some kind of surcharges if required in order to come to the final rate which is accepted by the company. Yeah, so these are a few things which are related to the global financial management. So of course all the transactional postings, all the transactions are built accordingly, that the different accounting schemas, different accounting rules are adopted at each transactional level and posted in different accounting schemas and different posting rules accordingly.